Hey folks, happy Friday. What a week. The election was Tuesday. We still don't know who the president is. Good news about all this is uncertainties in the market usually does very well for bonds. Bonds are, and I'm going to show you the instrument here in a second, bonds are one of the biggest determinants of what's going on with mortgage rates. The mortgage-backed security bond. Not 10-year treasuries, not 30-year treasuries, anything of that, but mortgage-backed securities. The weird thing is, too, with all the uncertainty out there, the stock market kind of rallied during the week. We're having a little bit of a difficulty today, but the stocks are even up. So let me go and show you why people follow me every day and kind of try to educate you guys on what's going on with the mortgage rates and why. So what we follow here on the channel is what's going on with mortgage-backed securities. This is the MBS market. This is a hard number to find unless you are in the business and subscribe or you follow somebody like me. I have a lot of realtors, a lot of financial planners, a lot of mortgage people that follow me on a daily basis to kind of track this. Okay, this instrument, it's a mortgage-backed security. It's a bond that trades on Wall Street. You might even have it in your investment portfolio that determines or is the biggest determining factor when it comes to mortgage rates. Okay, so let me explain Bonds 101 for you real quick for those that don't know how this works. As bond prices, in this case, what we're going to show here in a second, as the bond prices are red or go down, that means you're paying less for a bond. That means your rate of return, your yield, your mortgage rate is going up. Okay, so we don't like when it's red. We really like if it can continue every day to get better and better and better, which is green. As the price of the bond goes up, you're paying more for the bond. In turn, it gives you a lower yield on that bond, and that equates out to lower mortgage rates. Okay, so that's basically Bonds 101 in a nutshell. So what we follow here is this. So again, as the price goes down, the yield or the rate goes up. So we like when things are going up. Well, the problem is today we're down 9. Not really anything. I'll take it because on the week we're up about 50 basis points. You can see we were right in this range for a while. Look right through here, about between 310, 320, and now we're at 360. That's a huge move in a matter of 2 days, 3 days. Okay, so we had a big run. The weird thing is, or the odd thing is, usually when you have a run like that, this would equate out to mortgage rates going down maybe a quarter, 0.5%, up to 0.5%. We've seen adjustments of only about 0.1 to 0.2. So not as big a move for mortgage rates as we thought. The reason why I'm thinking that is what it is. Most mortgage lenders are sitting there saying we got more business than we can handle right now anyways. We're not going to push down rates any further because we think this is going to blip right back down into this range. Where we should be is basically where the Fed's trying to keep us at is right in this range right here. They've done a fantastic job stabilizing the mortgage rate markets. So every day you might get a little tick here, a little tick there, a little tick here. But overall, for the last 3 months, mortgage rates have been pretty darn steady, and we like stabilities in the market. All right. Some news that came out today is non-farm payrolls. There was supposed to be 600, and we actually did better than was expected there. Average hours worked, not a big difference. We were expecting 0.2, we were at 0.1. Average weekly hours, uptick 0.1, nothing there. So nothing this week that really affected or played any hindrance, good or bad, on the markets. The thing that's playing havoc on the market right now is the election. Who's going to get voted in and what their policies are going to do for the economy. And I'll leave it at that. I'm not going to get into politics on this channel. News today is basically job reports and election is hurting bonds. That's basically what I'm trying to explain. I post this newsletter at the end of each day so you can get informed on what's going on in the markets. Okay, so now what I try to do every day, and I apologize, I've been lacking at this for the past 2 weeks. We are buried with work. Thank you guys. Thank you. But I try to post this every day, the trends of what's going on with rates, and then I'm going to post my rates here and again in a second, like I promised you guys yesterday. So this chart that I follow every day, and I post it every day, you can see it's prepared November 6th, is going through 30-year rates with conforming loans, jumbo loans, FHA, and VA. So what this is saying is this generically, what is the 30-year conforming rate today? Well, this is kind of a generic rate where I'm going to go 2.83, and that's what it is. So let me go through these real quick. 30-year conforming rate today, on average, is 2.83. 1 day delta, delta means change, it's down 3 basis points. That 3 is 2 decimal places over. So yesterday this was 2.86. If it's down 3, it's 2.83. Not a big move. So that's good. A 7-day change is 4 basis points, and a year change is 84 basis points. So you can see right here, the VA rates right now are 100 basis points lower than last year. That's 1%. Okay, 100 basis points is 1%. 94 basis points is 0.94, 0.70, 0.84. So you can adjust that to these numbers over here. So if you took out a loan last year or refinanced or bought a home, your rate's probably at least 1 full % higher than it is today. Okay, so that's what's going on here. When I say, this is the average rate, there's good rates that are going to be higher than this. There's going to be some rates that are lower than this. It depends on your credit score, what kind of property you own, a whole bunch of other factors in there. And I have videos that explain that. Just check my channel and I go through, there's multiple videos on where I actually go through a rate sheet with you and explain to you 12 or 15 different parameters that go into the rate to modify the rate to each individual person's criteria. Okay, so that being said, let's get on to where my rates are right now. Here's where my rates are today, and what I did on these, and again, if you follow me on a daily basis, you get it, but for the newbies out there, there's different parameters that I try to explain to everybody, saying there is not one just generically, what's your 30-year fixed rate? It's not like, 275. There's a whole slew of things that go into the rate. And again, like I said, you're going to notice here 3 things actually. Let's go through it and then I'll point those out to you. So this top section here of my rates is just a small little snapshot of our rate sheet. Okay, what we're looking at here is if you're looking to purchase a home or rate and term refinance. Mainly that's taking your current balance and just rewriting that balance to a different rate or a different term. Okay, you're not taking out any money. 30-year term. This is the credit score, 740 plus, and this is what we call the loan to value. Loan to value is your loan amount divided by the value of your home. Okay, so the 740 credit score at 80% loan to value on a 30-year fixed rate that you're doing a purchase or a rate and term. Hopefully I didn't lose you there. The rate's 2.75, and then over here I have to legally disclose APR. The APR on that is 2.852. So that section is the APR. That's with costs included and so forth. So let's just go over rates right now because I'm probably confusing you enough. So we go back to this criteria, and at a 700 credit score, same loan to value, same parameters here, the rate's 2.875. 660 credit score, everything else the same, rate's 3.5. You notice something there? That at the only thing that changed in this is a 740 credit score to a 660. Your 75 basis points are 0.75% higher in rate because of that change. What I'm trying to educate people here is to say your credit score plays that much of an adjustment to your mortgage rate. Now, if we go down to this section, now this is you're looking to pull out cash. So you're refinancing your current balance and you're pulling out, say, $20,000, $30,000, $40,000 in cash to fix up the home, pay off some debts, do whatever you want. And I adjusted this number to a 75% cash out criteria because that's basically the max in most parameters, the maximum you can go. Okay, so with a cash out at 740 credit score, 75% loan to value, you're at 2.875. 700 score, you're at 3.375. 660 credit score, you're at 4.625. Now look at the difference between the rate and term or purchase at 660 and the cash out at 660. You're talking 1.125% adjustment in the rate. So hopefully a light bulb just went out and you're like, oh, you know what? I get it now. There's not just a specific 30-year term. It depends on, are you looking to do rate and term? Are you looking to cash out? What the loan to value is? What my credit score is? Other pieces of the puzzle that determine it is it a single family home or a multi-unit? Is it your primary home or rental property? All those are factored in and have changes to your rate. Again, remember what I said before. The mortgage-backed security is one of the biggest pieces of the puzzle to the rate, but there is also what's called loan level price adjustments, and that is your credit score, your loan to value, property type, rate and term purchase versus cash out, and so forth. So if you call somebody and they're like, or you say to them, well, I want to refinance, what's your 30-year term? Obviously, they're going to give you this rate, 2.75. Well, why would they come back and say, oh, 4.625? So if somebody answers that question as soon as you call, I'm not going to say they don't trust them, but they should not quote you a rate, okay? Here's what they should do, and here's what I do. I always say, I'm not trying to avoid your answering your question, but let me get a little more details on what you're looking for so we can figure out exactly what rate I can give you. Because what will happen is they'll wow you, say 2.75. By the time you do all the paperwork and put it in and do this and do that, and then you get your disclosures back and it's this, you'll probably freak. Well, they didn't lie to you because they do offer a 2.75 rate, but based on all the other factors in your loan, you didn't qualify for this rate. So I won't say it's a teaser rate, but it's a rate that they could offer, but it's not the rate that you're going to get. That's why every time somebody calls me, I'm like, I'm not trying to avoid your question, but please let's get a few more details so I can quote you an accurate rate. Okay, so that's that part of it. So let's go down now to the 15-year term. Okay, this is the top portion is purchase rate and term, just like we were before. Same scores and loan to value, but you're going to see the rates are different. Up here, we start at 2.75. On the 15-year, we're at 2.25. So you get it. Even term determines the variations in rates. So at 740 and 80% loan to value, you have a rate at 2.25. APR of 2.47. 700 credit score, you got the same. 660 credit score, your rate goes to 2.375. On a 15-year term, if you're looking to cash out, 740 score, you're at 2.5. 700, 2.625. 660, 2.75. Now we're going to go through my government programs and their rates. There's basically two government programs that we offer. Well, I take that back. We offer three: FHA, VA, and USDA. I'll start adding USDA next week. I apologize. I don't put them on here. On an FHA loan, you can go up to 96.5% loan to value. So if you're looking to buy a $100,000 home, you can finance 96.5% of that. So you only need 3.5% down. So if you're looking to purchase a home using the FHA program, or you're looking to refinance, 740 credit score, you're at 2.625. 720, 2.625. 680, 2.625. 600, 3%. So that's where we are in these areas. If your loan to value goes down from 96.5, this rate's going to go down. I have rates as low as 2.25% on refinances. And we can do some purchases if you put down a decent amount of money. VA, the caveat here is you can go to 100% financing, even if you're looking to cash out and pay off bills, which I highly suggest. If you got a lot of high interest rate credit cards and you're a veteran, this should be one program that you look at. So if you're looking to purchase or refinance, you can go up to 100% financing. The rate on a 740 credit score is 2.625. 720, 680 are all 2.625, and a 600 credit score is 3%. Now, what we're known for is our jumbo rates. Right now, today we're offering jumbo rates up to, well, at $1 million, and we can go up to $3 or $4 or $5 million. There's different criterias there, but if you're looking to do a purchase or rate and term, 780 credit score at 75% loan to value. We have a rate at 3%. Now this rate is a 30-year fixed. It's not an ARM. It's not an adjustable of any sort. It's not a negative AM. It's not an interest only. It's not any kind of adjustable. It is a 30-year fixed rate. 760 is 3.125, 740 3.25, 720 3.375. So those are rates for today. So now what I want to do is I got a surprise for you. I got a home valuation system that is better than Zillow. It's better than Trulia. It's better than just Googling what's my house worth. I highly suggest you use this. There's no strings attached. Share it everywhere you can. Send it to friends, neighbors, relatives, anywhere, anybody you can have put in there. It's a great tool. It's one of the best things I've found. I'm offering it to you guys for free. We use this system when we're trying to evaluate somebody's home when they put in an application. So how do we get to it? Well, you go to my website, therateupdate.com, and we just added it to the homepage. What you're going to do is go here, free home valuation analysis. Click it. It's going to take you to this right here. What I need you to do is put in your address. So let's just make up an address. Now, I'm not going to do that. Legalities, I don't know if I'm going to have issues with that. You put in the address here, you click. It's going to give you some detail. If you really want to unlock all of the information it gives you, all you need to do is put in your email address, and it's going to unlock a whirlwind of tools for you to explain everything about your house. Ideas on refinancing. Does it make sense to refinance now? If you got this rate versus this rate, how much would you save? A whole slew of toys. If you like this, and or you like anything else that you're seeing or you're following me or whatever, here's what I ask you to do. One, if you're looking to get pre-approved, we'd love to help you. And I have people available all the time. Go to our website, click the Apply Now button. It's going to be at the top right. I'm going to show you that in a second. There's an 800 number you can call us. I'm going to show you that as well. Or you can email me personally. My email or my name is Dan Frio. My email address is D for Dan, Frio, which is Frio, at preferredrate.com. Okay, that's that. So here's what I ask people to do on a daily basis. If you're in the process of refinancing right now, or you got pre-approved for a mortgage, or you're even, 3, 4, 6 weeks away from closing on a purchase or a refinance, do me a huge favor. Do yourself a favor. Send me what's called your loan estimate. And if you applied anywhere, you had to have received it legally. People ask me all the time, hey, Dan, send me a loan estimate. I can't unless you apply, because I have to have a file, a loan application to be able to produce that document. But send me that loan estimate you have. It's going to give me your name and address, the home value. It's going to give me the breakdown of your loan amount and everything, term, what type of property or loan it is, and then page 2 is going to give me all your fees. I'm going to go through that with a fine-tooth comb. I'm going to write all over it in a red pen, and I'm going to send it back to you. In most cases, here's what's happening. I'm getting you the same rate with thousands of dollars less in fees, okay? Or I'm giving you a lower rate with the same fees. Or I'm giving you a lower rate and lower fees. If I can't do any of those, I'm going to email you back saying, God bless you, what you got is good, sign, seal, deliver, run with it, close on it, and don't look back. 90% of the time, I'm giving back with you, and I'm beating one way or another. And right now we are getting caught up, but we are at basically double capacity, thanks to you guys. Okay, so how do you do this? How do you reach out to us if you want to call or get an application started? Pretty simple. Go to the website. The website is therateupdate.com. And it's going to take you, here's our homepage. You can click here, apply now. Pretty simple. You can click here, home purchase qualifier. Tell you if you qualify or not. Refinance checker. It's going to go through and ask you questions, see if we can refinance you and it makes sense. Get a free quote. All those will start the application going. If you want to do the tool that I explained earlier, here's your free home valuation system. If you want to call us, we got an 800 number right here, 844-775-LOAN, 844-775-5626. There's a video of me and I walk you through our office and meet the team. But again, if you want to email me, you can email me at D for Dan, Frio, at preferredrate.com. That is all I got for today. I hope you take advantage of at least the home valuation system. If nothing else, please share that with your friends, family, neighbors. It's a fantastic tool, and I know you'll like it, and it gives you a really good, accurate detail of your home. That being it, God bless. Happy Friday. Enjoy the weekend. Be safe, be healthy, and I'll see you Monday. Bye-bye.